Welcome to the Generational Wealth Podcast. Inflation was rated as the number one problem in America, according to recent polls. But now the Federal Reserve is saying that it might take up until 2025 before prices are back to normal. In today's video, I want to show you how costs can continue to rise over these years, and I'm going to give you 5 secrets so you can protect your money. All I need you to do is smash that like button. Guys, welcome to the show. Shout out to all of you who've booked your free session, Ensuring Your Way to Wealth. How rich people use insurance to build a fortune. Guys, if you haven't done this yet, now is the time. This is where I'm offering a free 1 hour private consultation with me, where I will walk you through little known secrets about how wealthy families create generational wealth through life insurance. I want to show you how they use these different life insurance policies to create new empires for their family. If you're ready to take control of your financial future, please click the link in the comments below. I can't wait to meet you and speak with you on the call. If you're online, please make sure that you leave me a comment. Let me know that you're here. Shout me out, show you some love. I can't wait to rap with you about tonight's talk. Guys, inflation has been the talk of the town. We're now really about to hit the fan. It's important that you watch this video now and make the right adjustments before tomorrow comes. I want to make sure that y'all are tuned in. This is where we're going to talk about 5 ways to protect your money. I want to give a big shout out to all of my sponsors. In case you're wondering, a sponsor is someone that donates to this channel to keep this show on air. As some of you know, I put a lot of time and hard work into making this content jam-packed and high value. So please, if you get a lot out of tonight's podcast, please do me a favor and tap that dollar icon directly below. I appreciate the support, and whoever gives the highest donation will be the official sponsor of the podcast. If you like using Cash App, all you got to do is go to $Gen Wealth Podcast. Enough talking. Let's begin. The inflation alarm, I'm sounding it off, y'all. Y'all might think, man, we've already been in inflation. We're already here. What more could we take? I want y'all to see what's happening in the economy. I want y'all to get prepared because something critical is about to happen. I'm going to share with y'all this article because I want y'all to see the receipts. I don't want y'all to think I'm just making stuff up. I want you to see how inflation has been reported from December up until today. Watch this. Inflation is America's number one problem and could take until 2025 to resolve. NY Fed President. NY Federal Reserve President expressed uncertainty when asked if inflation rates have raised their peak. I just want y'all to notice that. This article came out December of last year. The Federal Reserve President of New York expressed uncertainty when asked if inflation rates have reached their peak. Now, some of y'all might be saying, oh man, it sure is good that the economy is stabilizing. Y'all might have fallen for the okie doke. The reason why the president is saying that is because they still don't have a handle on inflation. They're trying the best that they can. I'm trying to show you guys on this podcast, the government has been real quiet about what's really going on with the economy. And there's a lot happening right now in society, but prices are still going up. Back in December, They said that inflation was the number one problem in America today. But then they changed it and said that government was the number one problem a month later. Now, I want to go back to sharing this article with you because I want y'all to see something. Inflation is the number one problem, according to this article. According to the New York Federal Reserve president, it could take until 2025, years from now, before inflation was solved. He said he's not certain if inflation rates have reached their peak. Now, watch this. It says John Williams, New York's Federal Reserve president. I'm going to zoom in on this so y'all can see it. John Williams, New York's Federal Reserve president, stressed the urgency of resolving the US's number one issue of inflation, which he predicted could take a couple of years. So don't get it twisted. Don't think that just because the Fed is raising the interest rates right now and you hear the president talking about fixing the economy, that everything is going back to normal. The Federal Reserve president is telling you it's going to take years. I want y'all to see this comment right here. Y'all see this? Williams said that inflation could remain elevated until 2025, though he anticipates a pretty significant decline in consumer prices in 2023 as supply chain disruptions continue to fade. I want y'all to see this. Ariel, are you watching this? It says, though he anticipates a pretty significant decline in consumer prices in 2023 as supply chain disruptions continue to fade, I got a surprise for y'all. Guess what just came out in a local article? Here it is. There's a new inflation warning for consumers coming from the supply chain. Now, wait a minute. I thought we just read an article where the Federal Reserve was talking about how inflation would take a few years to cool down, but it's a good thing that the supply chain issue is going away. Now, here we are, and we're seeing a new article 2 months later where the same supply chain that the Fed was telling us, oh, everything is handled, everything is slowing down, we've got it all under control. There's a new inflation warning for consumers coming from the supply chain. The very thing that they told you guys was slowing down is picking up. That's going to ramp up inflation. Look at these key points. I'm going to zoom in so y'all can see it. Smash that like button. Warehouses and distribution centers are pushing rates higher, with US storage prices up 1.4% month over month and nearly 11% year over year. An inventory glut will impact consumer prices, with the latest consumer price index data due out Tuesday. To break this down in layman's terms, tomorrow they're going to release a report on if prices are going up or down. That's going to make or break how the Fed is going to move. If the report shows that prices are still going up, y'all better buckle up because the Fed is going to do something to the economy. Charges to use cargo containers as temporary warehouse space are going to explode in the coming quarters. But wait a minute. I thought inflation is going down. I thought the economy is getting back to regular. Here it is. You have the same market where the Fed was telling you a couple months ago, hey, we think that we're going to be able to slow this thing down because supply chain is now getting stabilized. This very same industry is the ones giving the warning that prices are going up. It tells us charges to use cargo containers as temporary warehouse space are going to explode in the coming quarters. That's letting you know we have not seen the highest prices yet. It's still coming later this year, according to one port and intermodal expert. From construction to retail, key sectors of the economy expect pricing pressure to remain. So I want y'all to notice this. Everything regarding all of this inflation talk has lived and died off of supply chain issues because inflation has to do with supply and demand. When there's so much demand and not enough supply, that's when prices are going up. The supply chain industry is telling you, hey, expect prices to go even higher. We still got a lot of issues that have not been figured out. Look at this. As the markets prepare for the latest consumer price index data to be released on Tuesday, that's tomorrow, logistics managers are warning of a persistent source of inflation in the supply chain and saying consumers should be ready for the effect it will have on their wallets. Guys, this is the reason why we're doing this show today. Wall Street is already preparing for what could happen tomorrow. The economists, they're already making predictions on what this report is about to say. Last month, we started to see prices go down just a little bit, and everybody thought we were out of the woods. But tomorrow is going to make or break how the Federal Reserve is going to treat the economy. If a report comes out tomorrow saying that spending has gone up, then that means that the Fed is going to raise interest rates even higher. This is something that's going to impact you. If the Federal Reserve sees that the spending is still going down, then they're not going to go as hard on hitting the market. All of these things affect us because our buying power has dropped. How many of y'all are struggling to afford your cost of living? Groceries going up, housing prices going up. God knows education is going up. The student loans is through the roof. Everything is getting that much more expensive. And over 70% of Americans are living paycheck to paycheck. Guys, if the Fed doesn't get a handle on this problem immediately, you could see a lot of turmoil in the months to come. Because if people cannot afford to make a living, this is when crime is on the rise. I need y'all watching this. I need you checking out this show tonight. That way you can make the right adjustments tomorrow. See, for all of y'all that are trying to create generational wealth, the way that the big dogs do it is they're already forecasting. They don't wait for the problems to happen and then adjust and make adjustments. They're proactive versus reactive. They take action before the changes comes. So that's the reason why I want all of my generational wealth builders to see what's happening so that way I can give you these 5 keys on how you can avoid big changes. All of y'all should be dialed into what's going to happen tomorrow. And even if you watch to this episode after the changes have already been made, you can still apply everything that I'm going to share because it's still going to help you in this economy, and it's going to help you during future times when inflation goes up. Don't think this is the only time that inflation is ever going to go up, y'all. All right. So if y'all are on right now, once again, please make sure that y'all smash that like button. Also, please make sure that you leave me a comment and let me know your thoughts. What do you think about inflation? Do you think that prices are still going to go up? Or do you think that things are cooling down? Man, a couple days ago, I was out with my wife at a restaurant. Y'all, the prices are getting so out of this world. All I want to do is just get some water. I don't even want to buy nothing off the menu. It is absolutely insane, man. I'm talking just basic meals, nothing crazy, everything through the roof. If you're not following this, a lot is going to happen to your money. I want to make sure that you have the right protection so that way you and your family stay secure. I'm going to show you something from this article because they're pointing out that things can get worse than it is today. Look at what this says again. As the markets prepare for the latest consumer price index data to be released on Tuesday. See, if the markets are preparing for it, you know who else needs to be preparing for it? You. That's how you become a wise investor. As the markets prepare for the latest consumer price index data to be released on Tuesday, logistics managers are warning of a persistent source of inflation in the supply chain and saying consumers should be ready for the effect it will have on their wallets. Now, I'm not going to bore y'all by going through the whole article. We're just going to break this down. I want you to see what it says right here. National storage pricing is up 1.4% month over month and 10.6% year over year, according to Warehouse Quote. Many small businesses, which represent the largest share of the U.S. economy in number, but are often the last to benefit from a decline in supply chain pricing, tell CNBC they do not believe inflation has peaked. I want you guys to get ready. Small businesses, which represents the largest share of the US economy, believes that we're not at the highest point of inflation in this country. So as much as things cost today, trust and believe it's still going up. I want y'all to notice this chart. US storage prices are up more than 10% from a year ago. I did a video last year about hyperinflation. Back then, I was telling you guys about the gas prices, what was going on in grocery stores, how you really needed to make sure that you focused on raising your income because that's the only way that you will be able to sustain your current life. See, oftentimes you guys will say, well, man, I don't even need to live my life that big. This ain't about living your life that big. This is about you just being able to afford the life that you have right now. All of the prices are going up. Rent's going up. Mortgages are going up. Credit cards are going up. So just for you to be able to maintain the same quality living that you had a year ago, you've got to make more money to stay in the same place. I need y'all really locked in on this. US storage prices are up more than 10% from a year ago. That's the very supply chain that the Federal Reserve told you just 2 months ago they had it under control. Somebody's lying. They keep saying, oh man, inflation is not even going to be a big deal. Do y'all see how this has shifted over the past couple years? Inflation has been the talk for at least the past 2 years, y'all. And I want y'all to see what they've been saying. First, they said there really wasn't going to be inflation that crazy. Then they said, this is only temporary. Now they're saying inflation is going to be here until 2025. But then the same time that they told you that, they said that they had the supply chain issue on lock. But now there was a report just released saying that's not true. Small businesses don't even think that we're at the peak of inflation, much less do we have supply chain issues under control. That's the reason why there's so much happening right now in the marketplace. That's the reason why you're seeing all of these different political issues. You're seeing all of these mass layoffs happening. I really want you guys to stay ready so you don't have to get ready. I'm going to show you all this last part of the article. This article tells us that even with inflation slowing down, we're still going to be facing problems. Let me show you all this. Even with inflation, look at what Ariel said. Dang, lie after lie. But y'all really think y'all being told the truth about everything? Guess what? You know the reason why they don't tell us the truth about everything? Because they know if they tell the truth, the average person is going to lose their mind. The average person cannot afford this economy. And that's the reason why we as generational wealth builders got to focus on building generational wealth just so we can afford today. If you're not moving forward, you're moving backwards. That's the reason why this is so important. Look at this. It says, even with the rate of inflation slowing, higher consumer prices are expected to remain for a variety of other reasons. From contract terms set with suppliers before recent disinflation and company desire to maintain profit margins. I need y'all to see this. This is saying, even with the Fed raising the interest rates, even if the economy does cool down, prices are still going to be high because companies have already set contracts on prices. So they already have fixed rates on how much you're going to pay. Before the Fed could even intervene, these companies already protected themselves from contract terms set with suppliers before recent disinflation and company desire to maintain profit margins. Just because the Fed is raising the interest rates, it doesn't mean that businesses are going to instantly jump into action. I've told y'all this on prior shows. Some of y'all, my loyal ones, y'all have been on past shows where people criticized and said, Uzziah, why are you telling the people that the recession is still on the way? The recession has already come and went. I told y'all, just because the Fed makes an update, that doesn't mean that there's an instant change in the marketplace. I just showed y'all the article where it tells you that all of these businesses, they've already put contracts in writing. So even if the Fed does raise the interest rate, we already read, even with the rate of inflation slowing, higher consumer prices are expected to remain for a variety of other reasons, whether it's the contracts where there's already fixed prices, or the companies just want to keep themselves rich. Either way it goes, that means more money coming from you, more spending, less that we get to keep in our own pocket. All of these businesses, they all rely on the supply chain. This is how we get our products and services. So guys, There's nothing that you can do to just cry and whine about this. You cannot expect the government to save you. If the government is not going to save you and bail you out of this problem, what are you going to do to save yourself? That's the reason why we're going over 5 keys to protect your money. So I want you to think about this. We'll know by tomorrow if the prices are still going up. I want you guys to Google CPI report. Everybody's going to find out, is spending going up or spending going down? Nobody knows for sure. But one thing is for certain. Come tomorrow, the economy is going to shift. Make sure that y'all smash that like button. If y'all are getting a lot of value, please make sure that you donate, giving a super chat. Once again, your sponsorship goes a very long way. So that way I can educate the people on how to pivot. Now, let's say that the consumer price index does reflect higher prices. If that's true, the Fed is going to crack down on the economy harder. The Fed has been raising interest rates 8 consecutive times. That's made a lot of changes in the market. If the CPI report shows that prices are still going up, that's going to make the Fed go harder against inflation, which will create more layoffs to come. I know you guys have been seeing a lot of stories about folks getting laid off. If the Fed tries harder to stop spending in America, that means that businesses are going to take a hit. When businesses take a hit, employees will take a hit. When employees take a hit, that means a lot of people are going broke. The average American does not have enough money to survive 1 month outside of work. That's the reason why credit card debt right now is at an all-time high. But guess what? If the consumer price index shows that inflation is still on the rise, that means that credit card debt is going to get worse because the interest rates will go up. Guys, if you're in debt, now is the time to get out. If you have any kind of debt that's tied to a variable interest rate, you need to pay that off as quickly as you can. The Federal Reserve will be raising interest rates. If the economy is cooling down or not, the only question is, how much will the Fed raise the interest rates? If you've been following this channel, you already know how the Fed's interest rates adjustments affects you as a consumer. It's harder to create generational wealth if things get more expensive. With everything costing an arm and a leg, it's hard to invest your money. So what do we need to do if inflation keeps going up? How do we protect ourselves from high costs? That's what we're going to talk about. The 5 ways to protect yourself during inflation. The first thing that you want to do is diversify your investments. When prices are going up, you want to spread your money around different kinds of investments, because if you're not investing, you're losing money. Guys, it's as simple as that. If you're not investing, you're losing money. Inflation means the value of your dollar is going down. So the only way that you can keep your buying power maintained or better is if you're investing your money in the markets. You want to spread your money around different kinds of investments like stocks, bonds, real estate, and commodities. This can help to reduce the impact of inflation on your portfolio. Guys, I don't want this to be rocket science. Every time the economy becomes more expensive, the value of $1 becomes that much worse. So if you're not investing, all of the money that you have becomes that much weaker. This is why you need to put your money into different kinds of investments so that way, when the market goes up, it can combat the rising inflation. If you have nothing to go against inflation, you're done. Guys, this is the reason why the rich get richer and the poor get poor, because during times of inflation, rich people invest. Most of us don't invest our money. And that's why, as prices go up, we go down. We lose money because we're having to pay more to companies and we're not producing any wealth. We don't have any money in any investments that's appreciating in its value. If you're going to survive inflation, you've got to diversify your investments. And I'm going to talk more specifically about real estate and commodities in just a few moments. I want you to think about why diversifying your investments is important. The reason why you want to diversify during inflation is because you want your money in different asset classes. Asset classes mean different kinds of industries, different kinds of investments. When one asset class is performing poorly because of inflation, another asset class performs well. This is how the economy works. So, for example, if stocks are performing worse due to inflations, bond may perform better. Different markets are going to have different results. That's why you want to diversify. If you have all of your money in one asset class, if that asset class goes under, all of your money goes under with it. But it's better for you to invest than to do nothing at all. If you do nothing at all, that's 100% guarantee that you are destroying your ability to survive, because for every dollar that you make is getting weaker through inflation. The reason why you want to diversify is so that you could give yourself more security, because investing comes with risk. There's no guarantee that if you invest, it's just going to make a lot of money. You might end up taking a loss, but one way to curb your losses is by diversifying across different things. If stocks are going down, bonds can go up. This is typically how inflation works, because when inflation rises, that's when interest rates rise also, which make bonds more competitive. If you've been on my last few shows, I've been telling you guys about how bonds have interest rates that are going up right now. You can get a US Treasury bond for almost 7%. You've got to be able to grow your money. You've got to keep your money maintained in the market, because right now, if inflation is at 6%, that means if you don't have your money in any kind of investment that's returning a 6% interest or higher, that means that for every dollar that you have right now, you're losing money. I just need y'all to know that. Also, you want to think about real estate. I'm going to tell you a little bit more on this. I just want you guys to be thinking about these different kinds of asset classes, because these different asset classes adjust according to inflation. Let's talk about the second way that you can protect your money. Investing in inflation protected securities. This is known as TIPS, Treasury Inflation Protected Securities. By you investing in inflation protected securities, it can protect your money from inflation. You need to have assets that protect you from inflation. It's as simple as that. No different than if there was a fire, do you have fire extinguisher? Do you have body armor? What is going to be your protection from the economic fire? You got to see this, y'all. The economy is on fire, and not in a good way. Prices keep going up. The Fed has to work harder. That's going to affect everyone. So you got to think about, what can you do to protect your money from inflation? One of the ways that you can do it is by having Treasury inflation protected securities. The way that these TIPS work is that it adjusts in value when inflation rises or falls, so that the amount of money that you get back from that investment keeps pace with your cost of living. So let me give you an example. Let's say that you have $100 saved up. Inflation rises by 2%. The cost of goods and services that you could buy with that $100 is now going to cost $102 because of inflation. But if you invested in TIPS, Treasury inflated protected securities, the value of your investment will increase with the inflation. So you still have $100 worth of buying power. See, guys, creating generational wealth is about having buying power. It's not just about having a certain dollar amount. So if you got $100, but you're not invested into nothing, the $100 that you had today, it ain't going to be worth nothing tomorrow. I need you to think about that. Every dollar that you have is getting weaker by the day if you're not making wise decisions. You want to make sure that you take whatever you have and put it in the right place. So if you have a Treasury inflated protected security, when it's time for inflation, your money is going to adjust up with inflation to protect you. That's going to secure your buying power. That's going to protect your savings over time, even if the cost of living goes up. Now, you might be wondering, well, how do I get my hands on one of these tips? I need you to give me that. Give me a tip on how I can get a tip, Uzziah. Show me the game. There's multiple ways that you can get a Treasury inflation protected security. You can go directly through the United States Treasury, through its website, treasurydirect.gov. You'll set up an account, and it's pretty straightforward. Once you have an account set up, you can buy tips in increments as small as $100. This is if you want to protect your money. Now, guys, when I'm giving you all this game, I'm not saying that you must do this. I'm just providing you with different ways to protect your money. I'm providing you with different options that you can choose to protect your family from inflation. If you do absolutely nothing, you are going to suffer. The second way that you can get a tip is through a brokerage account. You could purchase tips through a brokerage firm like Charles Schwab, Fidelity, or E-Trade. This allows you to invest in tips and other kinds of investments in one single account. In order to get tips through a brokerage, you need to open up an investment account and transfer money into it. Guys, whether there's inflation or not, a lot of y'all need to get familiar with having a brokerage account. If you say that you want to create generational wealth, these are a lot of terms that need to become second nature. I don't care if it sounds like work. I don't care if it sounds like something that you've never done before. Oh my God, I'm scared. You should be really scared if you keep doing the same things that you've been doing and then you keep getting the same results that you've been getting. It's only going to get worse. That's the reason I keep telling y'all the middle class is going away. The economy is making a radical shift from haves and have-nots. Everything that has happened over the past 3 years has only sped that process up. And guys, let me tell y'all something for all of my brothers that are on the call. Don't you see how much women are only paying attention to the men that have generational wealth? Don't you see how a lot of women are only checking for the men that got their money together? This is how you do it. This is how you go from being the average guy to being a high value man. I'm trying to tell you, listen, I own over $1 million in real estate. I'm a best-selling author, an entrepreneur, a leader of a church with people that watch our congregation around the world. I'm not speaking like Joe Blow. I'm speaking as someone who has actually had financial success. When you study how I was able to build generational wealth over time, this is one of the ways of how to do it. I diversified my money. I don't have all of my money in one place because I know any market can crash. I might have over $1 million in real estate assets right now, but the housing market has crashed. So if I know that the housing market has crashed in the past, you think I'm going to have all of my money in there? No. That's why I have an online business. The average millionaire has 7 different streams of income. So you really got to plan out your roadmap of how you're going to keep yourself protected. The reason why the average millionaire has 7 different streams of income, because only having one source of income is a sure recipe for disaster. Whenever a crisis hits, you are a sitting duck in the marketplace. You want to make sure that you have multiple streams of income in differing amounts so that way you could give yourself as much security as you can. Let me check these comments. Gadite Gardner says, I just received a letter stating my energy bill is going up 33% over a 3-month span. Oh my God. That's triple the regular rate. See? I ain't making this up, y'all. I try to tell you, how are you going to be able to keep the lights on? How are you going to be able to support the essentials of life? We're not talking about going out and buying a luxury car. We're talking about just being able to afford electricity. Energy prices are through the roof. And that's why you need to make sure that your money is growing along with it. So guys, everything that we're talking about right now with Gadite Gardner, this is basic money common sense. If her energy bill is going up by 33%, what does that mean for your wages if it hasn't matched that? That means it costs a lot more for you to live the same quality of life. It means bills up, money down. That's what you got to see. So for all these different things, and this is just talking about energy. When we talk about electricity, gas, grocery prices, all of your different expenses, you need to start putting your money and your skills and time towards things that will have your money grow to these amounts or more. And that's the reason why I'm showing you guys all these different ways to do it. Now, if Gadai Gardner just keeps everything the same, she doesn't do anything to make or protect her money, if she just keeps living life like nothing is going on, guess what's going to happen to her money over time? Is going to be depleted from month to month. If your bills are tripling, the only thing that you can do to maintain your quality of living is to either get your money to triple along with it or higher, or guess what else? That money is going away. And you know what happens when the money goes away? That's when people start taking out credit cards. That's when people start taking out personal loans. That's when people start going into debt just to survive. I'm trying to show you all this now so that way you don't have to do that. Shebrew Naturals asked, what about CDs, certificate of deposit? I don't personally like CDs in this current market because, for one, the interest that you earn on a certificate of deposit right now is still lower than the inflation rate. The average CD you could probably get at a bank right now somewhere within the range of 4%. Inflation is 6.5. So that means your money, it still isn't beating the rate of inflation, but it is doing a lot better than not doing anything at all. So it beats nothing, but it's still not above the threshold of where we want to get. That's my point. Another reason why I'm not a personal fan of CDs in this market is because the Federal Reserve is still raising interest rates. So if you had gotten a certificate of deposit and let's say you went into a promise that you were going to put money into the account and you were going to get 3% return of interest, and you did that months ago, had you not done that, you could have waited and got a CD where you could have gotten up at 4%. The interest rates are still going up. So I don't like the fact that because the interest rates are still going up, you could lock yourself into a lower rate. That's the reason why I did this video today, so that way you guys can learn how to watch the market. Because when you watch the market, that's when you can learn how you're supposed to pivot. When you see the market do this, you do that. When you see the market go left, you go right. And so those are my thoughts. But for me personally, I recommend that you guys really start to consider one of these options that I'm going to share with you on this show. Thus far, we've talked about putting your money in different places. Some of you guys might decide, hey, one of those different places, I want it to be a CD. Might not be the best option, but it beats the hell out of doing nothing and letting your money drop. So we talked about putting your money in different asset classes. And now I'm talking about tips, treasury, inflation protected securities. When you have a treasury inflation protected security, that's you getting protection over inflation wherever it goes. See, the difference between a tip and a CD is you're going to get that CD at a fixed interest rate. But if the inflation rises beyond the interest rate that you're getting on the CD, guess what's going to protect you? A tip. If you had $100 saved up and inflation rises, your tip is going to push up your dollar amount to match wherever the inflation went. That's going to keep your buying power steady, but you have no assurance of that if you get into other assets. So again, you can get a tip through the US Treasury, you can get it through a brokerage, You can also get it through a mutual fund or an ETF. Okay. I always tell you guys about index funds. Some of you guys like investing in mutual funds. You can get access to that through a brokerage account. This is where you'll look it up and you'll transfer money into it. So do your research and see what you want to do. Now, the third way that you can protect your money from inflation is through real estate. This is how I made $1 million. Guys, when I tell you that I have over $1 million worth of real estate assets, it's largely in part to appreciation. When I bought my first real estate property in North Austin, I bought it for only $230,000. Last year, that same property was valued at over $600,000 due to inflation. There are people who build wealth that actually look forward to inflation because that's when their money is coming up. But the masses of the people hate inflation because when the market is going up, their wages stay the same. That's why you've got to tie your money to things that appreciate over time. You got to understand really how this game is played, y'all. If all you're doing is working at a job that's going to pay you a fixed salary or a fixed hourly wage, that means nothing if ever the economy is going up, if the inflation rate is going up. But here it is, your wage is still the same. That means that no matter what it is that you're making, you're losing buying power. Not all money is the same. That's the reason why I encourage you guys to understand the difference between income and wealth. Income is the amount of money that you make in your source of business. Wealth is what you did with that money when you put it towards an appreciating asset. Job, income, real estate, wealth. You want to start putting your money into things where when inflation goes up, your dollars are on the rise. If you don't have that, you're always going to take a hit. Real estate can be a very good hedge against inflation because property values typically rise. Now, if you watched my last podcast about the 10 ways to make passive income, 10 proven ways to make passive income, you'll need to check that out. You saw I broke down how you could make passive income through owning rental property or through a real estate investment trust, also known as a REIT. You can own your own rental property and you will appreciate the appreciation of that asset, or you can invest in a real estate investment trust and you can own shares that have appreciated. You want to think a lot about real estate anytime the market is going through inflation. In fact, I already knew that inflation is still going up before the Federal Reserve or the Consumer Price Index said anything about it. You know why? Because I saw the market values of my properties going up. When you own assets, you don't have to wait for the government to tell you a story, because half the time they're going to lie to you about what's happening. Remember that? Earlier, I showed you in December, there was a poll where Americans said that inflation was the number one problem in America. The average person is struggling to get by. Then it changed within a matter of months to now the government is the number one problem. The reason why it changed from number one to number two is because the average American was convinced that the Federal Reserve successfully stopped inflation. But now, the same thing that the Federal Reserve said that they had under control with supply chain, the supply chain industry just came out and said, hey, y'all, just kidding. We're still going up. Most small businesses say that inflation hasn't even reached its peak, and we're going to find out how that affected the economy tomorrow. That's why I want y'all to look for the consumer price index. I want you to see if prices went up and how you can start applying some of these steps. If the prices went down, beautiful. But that's still going to have the Fed raising interest rates. If the Fed raises the interest rates, make sure that you watch the video that I did last week about how the Fed is raising the interest rates. Here's what you need to do. All of this content on the Generational Wealth podcast is to protect you and your family through all seasons, is to make sure that every last one of us still are able to put food on the table no matter the climate. That's the reason why I need y'all to smash that like button. There's so many people that need to hear about this, but they have absolutely no idea what's going on. And that's the reason why when all of this pops off, they're going to be the main ones hurting. Look at what Ariel said. What you are saying about job income is so true. It's like you said, bills up, money down. Absolutely. It's funny, Ariel, because I remember even having $1 million at one point. It was a really big deal. But even $1 million, it doesn't go as far as it used to. That's because of inflation. During the times of inflation, the value of the dollar drops. So the only way that you can stay competitive is if your assets increase with inflation. It's not going to do that if you're not invested. It's not going to do that if you don't own nothing. You got to be able to have some kind of asset, some kind of security, some kind of insurance. That's the reason why I've been doing these free calls. Guys, I've been doing the free calls. 1 hour. I'm showing you how wealthy people use insurance to build wealth. Why do wealthy people use insurance to build wealth? Because so many other things are unpredictable. That's the reason why insurance matters. You don't know if you're going to be the next real estate millionaire because the real estate market could crash. That's why you need insurance. You don't know if you're going to be the next stock market millionaire because the stock market can crash. That's why you need insurance. The wealthiest families in the world build wealth through insurance. They just don't tell you about it. They just tell you to go get a job. They take all of your work, all of the money that you're making for their companies, and they're putting that money into insurance. And so I just want you guys to know this. If you're not doing anything with your money, fool and his money are soon parted. But if you want to learn how wealthy people build wealth through insurance, feel free to click the link in the comments, guys. This is a free session, 1 hour. I show you how they do it. I've already met with a lot of you, including Gadite Gardner, and a lot of you guys are getting protected. Kudos to you. If you're just now getting on, make sure that you smash that like button. Akaman says, if you just working at a job, I recommend opening up a brokerage account or a Roth IRA for starters. Besides paying off your debts, first step. I want you to get with me on that insurance call, Ak. Get with me because there's some things that I got to share with you on that I think that you would enjoy. Okay, so For those of y'all that are just joining, tonight we're talking about the inflation alarm, how to navigate the coming economic storm. We went over articles where I showed you the supply chain industry is saying that inflation will probably go higher. How even if the Federal Reserve continues to raise interest rates, it's still going to keep prices very high because a lot of companies have already fixed prices through contracts. Even if the Fed slowed down the economy, businesses are still trying to keep prices high because they want to retain their profits. That's why you got to be on the lookout for what's to come. You see these layoffs happening. All I could do is warn y'all, you could lead a horse to water, but you can't make them drink. So let's go back to the topic. We've talked about diversifying your investments. We've talked about inflation protected securities. I just told you all about real estate. Number 4, build an emergency fund. Anytime I tell you guys how to win with money, I'm always going to tell you to build an emergency fund. That is the foundation to building wealth. Guys, there's a few foundations to building wealth. I don't know if y'all understand that. For some of you guys that are in the health and fitness industry, you know that if you're looking to achieve certain goals like building muscle, there's a few fundamental workouts. If you're not doing the fundamental workouts, you're not going to get those gains. The same thing is true in personal finance. If you do not understand the fundamentals of an emergency fund, there's a 95% chance that you're going to suffer. You've got to have a cash reserve to weather the storm. Now, guys, I know that some of you are tapping in and you're like, Uzziah, how could you tell us to watch out for inflation by putting cash in the bank, and you already told us when your cash is in the bank, you're not getting any interest? The dollar value is dropping. Yes, that's why you're not putting all of your money in the bank. You're only putting the amount that you need to pull from in the event of an emergency. Why? Because if there's inflation, that means you might not have enough money to cover all of your expenses from month to month. I want us to go back to Gadite Gardner. I'm going to really spell this out for y'all. Gadite Gardner said that she just received a letter stating that her energy bill is going up 33% over a 3-month span. The way that I want you guys to think about this is, if this were to happen to you, do you make enough money right now in your current budget to be able to afford that during this time? If there's a certain window of inflation, it's going to be a minute before prices go back down. Do you have the money right now from month to month with no savings to be able to afford 33% price increases without going into debt? This is the reason why you need an emergency fund, because you don't know what tomorrow will bring. So if you end up getting a letter that some essential bill that you can't go without happens to rise by 30%, you already have extra money set aside to cover those emergencies. If you get hit by something like this and you don't have enough from your monthly income to afford it, thankfully you've saved some money away to still be able to maintain yourself. But what's going to happen if you have no emergency fund? You could get a letter like this in the mail. You can no longer afford your expenses. And that means that either A, you're going to go into debt, or B, you're going to be out of power. You're not going to keep the lights on in your house. This is simple math. This is the reason why I always recommend having an emergency fund even during times of inflation, because even though the value of the dollar is dropping and you want to have more funds in different places, you still need a certain amount into an emergency fund that you can pull from at any time. So that way, if inflation has you spending beyond your means, you can pull from 3 to 6 months worth of emergency expenses saved up for your cost of living. So that way you can still keep the bills intact. If you don't have an emergency fund, you will quickly go into debt. Y'all tracking? Y'all with me on that? I need y'all to leave me a comment. I need y'all to let me know if you understand why having an emergency fund will help you weather the short-term effects of inflation and protect you against unexpected expenses. I'm sure Gadai Gardner was thrown off by that letter that come. I don't know if she was expecting that. That's why an emergency fund is so powerful. So, guys, I want us to talk about the fifth key to protecting your money. I hope that y'all are getting a lot of value from this. If you are, please make sure that y'all donate. This is what helps to keep the channel going. The fifth thing that you need to do is to consider alternative investments. This is where people talk about things like gold and cryptocurrency. Typically, whenever cash is going down, the commodity of gold becomes that much more popular. It becomes more valuable, but these investments can be volatile. Okay. So I don't want you to sell the house and just go and buy up all of these bars of gold. For everything that I'm giving you guys on this channel, you've got to make your own decisions. This is not official investment advisor advice. That's not what this is. I'm not coming from that perspective. I'm doing the Generational Wealth podcast. This is education for you. Everything that I say is purely up to your discretion. And I cannot dictate what's going to happen in the market. What I can tell you is what I've done to protect my family, and I can share it with you as being your brother's keeper. That's all I could do, y'all. So whether you decide to make these moves or not, me and my house, we're going to serve the Lord. We're going to make sure that we focus on protecting ourselves during all seasons to the best of our ability. Alternative investments like gold or cryptocurrency. Some guys are crypto guys. I own shares of crypto. Now, I want to say something about cryptocurrency. And man, you just go back and watch the old videos, guys. If y'all don't know how powerful the Generation Wealth podcast is, God be giving me the game to give to y'all before things happen. When everybody was ranting and raving about cryptocurrency, you know what I did? I dropped a video about the dark side of cryptocurrency, and nobody wanted to watch it. And then you started reading all of these stories about how all of these people were taking themselves out because they invested all their money in cryptocurrency and then they went bankrupt. Nobody talks about how volatile crypto really is. Now, again, is cryptocurrency and gold a potential hedge against inflation? Yes. Different currencies can grow if the dollar currency is going down. It operates in a seesaw, but there's no guarantee that crypto will go up during a bad market. So I just want you guys to proceed with caution. I'm going to say the same thing that I have always said about crypto. Do not put more money into it than you can afford to lose. Do not put in more money that you're not comfortable losing. There's got to be a certain amount of money, guys. This is just investment 101. When you invest, you got to be prepared to lose. Some investments are riskier than others. There have been people that have made a lot of money from crypto, and there have been people that have lost a lot of money from crypto. I don't know who you're going to be. All I can tell you is that typically when there's inflation in the market, investors look for alternative investments to keep their wealth growing. You can choose from gold. You can choose from cryptocurrency. There's all these different things. But those are the 5 ways to protect yourself during inflationary times. And I've got a bonus. Now is the time to work on building your business. As a backup, in case you're laid off and you have a hard time finding another job. I need y'all to take this seriously. Years ago, I told my clients, within 5 years, 50% of all jobs will be replaced by automation. If you heard that when I was saying that back in 2018, you would look back 5 years later and say, wow, look at what happened. Look at all of these new technology tools, things that are replacing people and their jobs left and right. There's going to be massive layoffs this year, and it's only going to get worse if that CPI report shows tomorrow that spending is going up. Because you know what happens if CPI report tomorrow shows that spending is going up? That's going to send a direct message to the Fed that you're not doing enough. If the Fed gets that message, they're going to be under pressure from the government to slow prices down. They're going to have to take serious action to block spending in the economy. If they block spending in the economy, part of what they could be blocking is your paycheck. Because that's the spending that businesses do when they issue payroll. They are spending money to help you survive. Now is the time to work on building your own business so that you don't have to rely on a company that can take a market hit. Guys, I want you to notice this. More millionaires are made during a recession than any other time in history. So many businesses take off during recessions because during a recession, that's when there's so many opportunities to innovate and be able to provide other options, because a lot of the businesses that are already in the market, while they're taking a hit, they might not even be able to keep the doors open. So this creates an opportunity for new businesses to creep in. I want you guys to get serious about taking ownership. 2/3 of all millionaires are business owners. There's a reason for that. You don't have to have a Fortune 500 company. Just have you a little side hustle, something that'll make sure that if everything comes crashing down, you still have the skill of making money on your own, and you don't have to rely on a company or the government to help you out. I want you to understand this. When you talk about inflation, business ownership is the key to wealth. Because let's go back to Gadite Gardner. I'm so thankful, sister, that you gave us that example. Just thank you so much for sharing that, because this is something that I need people to see on a practical scale. If Gadite Gardner received a letter saying that her energy bill is going up 33% over a 3-month span, if she works at a job, do you think that she can go to a boss and ask for a 33% raise? Do you think that she can go into her office tomorrow where she works and say, hey, boss, here's the letter that I just got from the energy company. They said my energy bill is going to go up by 33%. Now, I noticed that my wages aren't going up by 33%. I didn't get a 33% raise. So I was just wondering, can you match this amount so that way I can maintain my quality of living? If she goes into her boss's office and asks for that, the boss is going to look at her like she's crazy. That's why you need to own a business, because nobody is going to give you a 33% raise but you. If you own a business, you could make a raise of up to 50% or more. Why? Because for one, you control the prices. You have direct control over how much something will sell. Look at what the supply chain industry said. They said, we don't care what the Fed's doing. We're going to keep making our money and getting our profits. They're protecting themselves from the economy. You got to follow suit. And see, that's the reason why this content is so critical, because everybody wants to act like the victim. But you got to learn how the game is played. You got to stop getting played and learn how to play. The masses, see, they're going to sit back and say, I can't make more money. Woe is me. I can't keep up with the lost cost of living. And that's life. So are you going to stand there and suffer, or are you going to do what wealthy people do to avoid these situations? I told you earlier, when inflation goes up, wealthy people get excited, because that means for every asset they own, it's only making them richer. They're making more money without doing anything. Guys, last year when inflation was skyrocketing, I earned an extra $100,000 in assets without doing anything. I didn't go up, the market went up. And when the market went up, so did my net worth. So you got to understand, this is working smarter, not harder. This is making your money work for you. We've been programmed as a people to be the workers and not the owners. But then when the market crashes happen, the workers, they're the main ones on the chopping block. The owners have a lot more security. So please, if this could ever happen to you, just consider the only way that you're going to be able to match this increase is if you're in a position to pay yourself, is if you're in a position to make your own money, charge your own prices, and then if your business gets 50x, you can get a portion of that. That's the only way to do it, guys. Because guess what? Even if a company that you work for makes 50x, they're not giving you those kind of raises. I know tons of people that work for companies that double and triple in size every single year, and they still might only walk away with a 2% salary increase at best. This is why you have to run your own business. Guys, I hope that y'all got a lot of value. I'm praying for y'all during these times. Please do something to manage your money. Leave me a comment and let me know, what are you going to do to protect your family during this time? Are you going to build an emergency fund if you don't have one yet? Are you going to look into investing in different assets? Are you going to start researching things like a treasury, inflation protected security? What are you going to do to survive this market? Guys, when the storm is coming, you want to make sure that you got your raincoat on. You want to make sure that you have shelter. This is how you can shelter your money. Inflation is a growing concern for all Americans, and now is the time to protect your finances. By you understanding the warning signs of inflation, you can use strategies like diversifying your investments and getting yourself protected so that you can navigate the storm to protect your financial future. I love y'all. I'm out of here. I didn't know if any of y'all wanted to cam up with me, but just in case y'all do, I'm going to put the link below. If you're still on, please make sure that you smash that like button. Please make sure that y'all donate. If you got a lot of value from tonight's podcast, and I hope that you did, please consider donating something to the channel, y'all. All right. I'm not asking for a ton of money. However, your support keeps the channel going. I try to do these shows Monday, Wednesday, Fridays, and it's not easy with my schedule, y'all. So if y'all could please give back to the channel some way, somehow, that would be great. If you like using Cash App, $ Gen Wealth Podcasts. You could donate directly through YouTube just by clicking the dollar icon directly below the live comment section. If you watch this podcast after the live stream is over, you can still donate on YouTube. All you got to do is press the button that says thanks. Or if you want to use PayPal, just go to paypal.me/The Uzziah Show. The information is on the screen. Okay. I definitely appreciate all of y'all for rocking with me tonight. If you haven't done so, if this is your first time watching this channel, please make sure that you subscribe. So that way you can receive an alert whenever I have another lesson, another show on creating generational wealth, because this is so key for us to level up. I pray that you guys have a great week. And y'all remember y'all homework. Make sure that you'll check out that CPI index tomorrow. You never know. We might end up talking about it on Wednesday. All right, y'all. Have a great week, and I'll see you soon. Until next time, keep pushing.